All righty. Now we are going live. Happy Thursday. We're getting through this week. We're getting through the week. So we're excited to see everyone on our live today. For those of you who are new to Purse Strings, we're all about providing free financial education for women, just a one-stop shop to get some questions answered, get the wheels turning, get some of that, those basic knowledge. And then when you're ready to purchase a home, make an estate plan for retirement, we have top tier financial professionals willing, ready, and able to serve you. We call those our Purse Strings approved professionals, and Marla Barch is one of them. She's a mortgage expert. And so today we're going to talk all about purchasing a home. But before we dive into all that fun, Marla, could you give a little intro of who you are and what you do?
Sure. So I've been in the mortgage world for 20 years. I know I'm dating myself. I don't look that young. I mean, that old, but 20 years I've been doing this. And my approach has always been focused on education. So it's not just like, for lack of a better phrase, wham, bam, thank you, ma'am. Some banks you go in and they're just like, hey, here's your credit, you're approved, boom, see you later. So I do a lot of education. I focus on making sure people understand what they're getting into, what budget they're actually comfortable with, not just how much the bank wants to approve them for, and just the whole process. So they feel comfortable with the process. They understand why it's a good investment and how it helps them.
Awesome. Yeah, we love having you on. For those of you who don't know, Marla is Chicago-based, but I know you can work around the country. But we're excited to have you on today and talk about purchasing a home. And when I first learned about purchasing a home, I didn't realize that you do go to the mortgage expert first. You don't go straight to the realtor. So could you just start with like the beginning process of, where do we even begin?
Yes, absolutely. So definitely the mortgage is the first stop. A lot of people will call a real estate agent first because that's what they think of when they buy a home. But a good real estate agent will tell you, great, I'd be glad to help. Let me have you call the mortgage expert and then call me back. So it definitely stops with the mortgage expert. You need to understand what the numbers are and what they look like before you even narrow down a search for what homes might meet your needs. So like I said before, a typical bank, they're figuring out what they call the pre-approval, which is really just asking the question of how much money is the bank willing to lend you? So they're going to look at your income, your job stability, how much money you have in the bank, your credit score, your debt, if you have car loans, student loans, your entire financial picture to figure out what you qualify for. And at the average bank, that's what you're going to get. And they'll give you, here's your pre-approval letter, go buy a $250,000 house or whatever the dollar amount is for you. And then that's it. Then you go take that to your realtor and you go shop for homes. So with me, instead of just doing a pre-approval, I have a more comprehensive process that's called the home buying plan. So this takes into account not just what you qualify for, but also what your goals are, what your budget is. So one of the questions I ask is, what is the monthly payment you'd be comfortable with, right, which isn't part of the normal pre-approval process. So I really kind of dig in. The first step is a home buyer consultation. And I ask you those questions. What are your goals? What are your budget? Is this a long-term investment? Do you want a condo? Do you want a house? Do you want to live in the city, the suburbs? All of the details about what you want before I crunch the numbers. So then once that's done, then you're ready to shop for homes, because we can tell the real estate agent, okay, here's your target purchase price. And then you sit with them and go through the non-financial things. I need this many bedrooms, bathrooms. I want an updated kitchen. I don't care if it's ugly and outdated. All of those nuances you go through with the realtor, but they really need that number first to know what is the purchase price that, again, not just pre-approved for, but fits your budget.
Because it sounds like you can get pre-approved for more than, sometimes they offer you a little bit more debt than you can really handle. Mm-hmm. And so just because they can give you that money, it might cost you $4,000 a month, which wasn't your plan. And so it might seem like I'll buy that $1 million house, and they're willing to give you the money, but that's not always the best purchase for you.
Exactly. Yeah. And that's why it's great to look at your own budget first, because when I ask that question, what is the monthly payment you'd be comfortable with? I get a lot of blank stares. A lot of people say, oh, I haven't thought about that. I don't know my budget. Well, here's how much I pay in rent. So I guess I'd be comfortable, So if you think about your budget in advance, that really helps. But yeah, there could be a case where you qualify for $4,000 a month, but you tell me you're only comfortable paying $2,000 a month. So that budget point is really critical.
Definitely. And so what kind of paperwork, do people need to bring in when they're working with you?
Yeah, so it really depends on your situation. If you're self-employed, it's going to be different than if you just have a W-2 job. If you have child support or alimony, that's different. There's a lot of variances. So it really is customized. And once we connect, I can let you know what the list is for you. The other thing that I have that this is pretty common amongst most banks nowadays is I have an online application. And the online application is responsive to your answer. So it will ask you, do you have a W-2 job with a straight salary? And if you say yes, it'll say, I need 2 pay stubs and your last W-2. If you say you're self-employed, it will say, I need your last 2 tax returns, right? So it is responsive. So as you do the application, it will ask for certain documents. And then, of course, there's a secure portal to upload them. But yeah, it really depends on your situation. That's why I don't like generalized information. I don't like, here's a list, here's a program, because it's so customized to everyone. So having that home buyer consultation that really addresses your specific situation is really the best way to go.
And that's a huge thing. I mean, like the alimony, how does that play in, or whatever child support you're receiving? Because that can play into your mortgage, but it's a different equation every time.
Exactly. Yeah. And a lot of people don't realize some of that other income can count. I mean, the main thing we want to see is that it's stable and likely to continue. So let's say you have a 17-year-old who's a senior in high school and you're getting child support. Well, guess what? We're not going to use that because that's about to end, So those are all the factors we look at. But yeah, your qualifying isn't just based on your job income. Some people have Social Security, disability income. Some people have rental properties they get income off of. They have ownership shares in businesses. There's a lot of different type of income. I've had people who did foster care and adoption, and you get subsidies for that. So yeah, any money you have coming in the door, or sometimes even money that might possibly be coming in the door, you're about to start a new job, you're about to retire, and you're going to get your pension. So yeah, all of that is taken into consideration. And I think in general, what I find is it's more lenient than most people expect. I think a lot of people think that the guidelines are really hard. They need to have really, really high income. They need to have 800 credit score, 20% down payment. And often it's not that strict. The guidelines are fairly lenient depending on the loan program. There's low down payment. If your credit is challenged, that's fine. But a lot of people are kind of ashamed to ask if they think they might get denied. They're like, oh, I don't want to apply, and they're going to tell me my credit is bad. I had that one collection, and it's usually not as bad as people think.
Yeah, and I know the way you work with people is sometimes, let's say the credit score is not perfect right away, you can kind of give tips on how to really increase it. Because, just because you can't buy it today, maybe in 6 months you can. Exactly. So what kind of tips do you have around, like, what do you need to know about the credit score? Or like, I know sometimes there's limitations around big purchases. So what are kind of your tips in, the credit score category?
Exactly. So first of all, when you have a consultation with me, it's a 100% no judgment zone. Okay. So don't ever worry about, oh, I got behind on my credit during the divorce, all of us live life happens. Most of us have had some financial trauma. So it's a totally judgment-free zone. So first of all, never feel bad about it. Even if you want to have a consultation knowing, oh, there's no way I'm going to qualify for a loan, I just want to get those tips so I make sure I'm on the right path. So in 1 year, 2 years, 3 years, even if it's 5 years, you're on the right path toward qualifying. You don't have to be ready to buy a home today in order to call me for a consultation. So those tips usually revolve around 3 main categories. So one is your savings. How much money do you need? And often that's actually also, like I said, pretty low. There are a lot of programs with low down payment. There's down payment assistance. You can negotiate with the seller to pay your closing costs. So, I literally have clients buy homes for like $3,000. Of course, it doesn't apply to everyone, but sometimes they can. And, right now, income tax refunds are coming out. That's $3,000 for a lot of people. You can take a loan against your 401k. You can get a gift from family. So you don't need a lot of money. But let's say you do. Let's say you have no money. You're not getting income tax refund. You don't have a 401k. There's no family that can help. I'll run the numbers and tell you this is how much money you need to save. So you know what that number is, what that target you're working towards. So money is one area. The next area is debt. So debt isn't always a problem. Again, it's based on your situation. But if in your case, the debt is a problem, we can talk about not even just paying it off or paying it down, but sometimes you can restructure it. Let's say you have, a car payment that's $600 a month, but you've already paid half of it off. Well, in some cases, you can refinance that to a new car loan over 5 years and get half the payment. So you can reduce, sometimes there's a way to reduce payments without just paying off debt. That example doesn't actually cost you any money. You don't have to spend money to refinance your car. It's not like you're paying it off in full. So there are some options just to sort of restructure debt if your debt is too high. In some cases, I've told people to call their student loan company and ask for an income-based payment, because those payments are often lower than the fully amortized payment. And sometimes that helps you qualify. So debt, so your savings, your debt, and then your credit score. So your credit score is interrelated but different from your debt. Your debt and all your liabilities are on your credit report, and they're factored in to calculate what your credit score is, but they are two separate factors. There are cases where someone has a credit score that's fine, but their debt's too high, or their debt is fine, but their credit score is too low. And so the credit score, the tools needed and the techniques needed to get your credit score up are sometimes different, sometimes even in conflict with the techniques to get your debt down, right? So it really depends on your situation. But if your problem is credit, there are a lot of ways to get your credit up, some that don't cost any money at all. So one tip that I use a lot, so like I was saying with the car loan, you can refinance your car loan to a lower payment. Sometimes you can move money from credit cards to other types of debt. So if your credit score is low and your credit cards are maxed out, that is something the credit bureaus like hate, hate, hate. That is the worst for your credit. Like sometimes worse than even having like a collection or something actually bad. It's really damaging. So sometimes though, you don't have to necessarily just pay the credit cards down. You can move that credit card debt to something else. So to a personal loan, to a loan against your 401k retirement account, to a loan in your spouse's name, so it's off your name entirely. So sometimes there's just ways to shift things around. And I've seen people literally get 100 points from just shifting debt from a credit card to a loan. And literally, they didn't spend any money. They didn't pay anything off. They still have the exact same amount of debt. It's just a different type of debt. So yeah, all of those tips are part of the plan. And even if you do qualify, if you qualify, but your credit score is still not in the best tier to get the best rates, I'll still give you the tips, because you could still buy a house, but if we're able to boost your score a little more, you may get a better interest rate. So either way, whether you qualify or not right now, you'll still get all of those tips on how to build your credit, if you need to fix your debt, how much savings you need. So like I said in the beginning, what I started with is it's very educational. It's really just giving you information. It's not to say you're obligated, you must go buy a house now that you had a consultation with me. It's really just educating people, getting you the information you need, making sure you're on the right path to homeownership, whether it's right now or 5 years, whatever that looks like for you.
I love that. That's so much great information. And it's, before you make probably one of the largest purchases in your lifetime, you want to make sure, you have all your ducks in a row and all those different things to make the best of the situation, whether that be moving debt, increasing your credit score, getting a lower rate, just learning about it, taking a couple years, whatever it is. It's, of course, it takes a little bit to make a huge purchase like that. That's a ton of great information. Somebody wrote in and was curious about the kind of the interest rates today. Can you kind of speak to that?
Yeah. So interest rates have actually come down in the last couple of months, which is super exciting. But the first thing I will say is if anyone had owned a home before or was thinking about owning a home, got pre-approved a year ago or more, and so you have in your head that normal rates are 2.5% to 3%. First thing I will say is that is the most abnormal thing ever. The regular market mortgage rates never would be 2.5%, 3%. They were that low because the Federal Reserve was manipulating the market. So for people who are like, I'm going to sit around and wait for them to get back to 2%, that's not a normal rate and that's not going to happen. So we did have a great period where people were able to benefit from that, but it's not like you missed out and rates are so high now. Rates are back to normal. This is not high. This is like a normal market where normal mortgage rates have been across history, right? Of course, there's some fluctuations. In the 80s, they were 16% or whatever, and so 5 to 6% is actually very good compared to a lot of history, right? So I would get out of your head this crap about it was 3% and maybe it'll go back. No, that was a total anomaly. It was artificial. That's not how the market works.
Shit would have to hit the fan again if we're getting back to that. And exactly. We don't want that to happen.
Right. So when inflation started going up, which was the main cause of rates going up, it was not the Federal Reserve. So when you hear on the news, the Fed is raising their rate, that does not mean mortgage rates are going up. Ignore it. Just totally ignore it. And the media is going to give you wrong information. Your news person, oh, the Fed rates went up, mortgage rates are going up. No, it's totally wrong, totally garbage. The reason mortgage rates went up is because of inflation. Inflation went up, okay? So rates were in the 7s. And yes, even though that's historically still in the normal range, obviously it was scary coming off 3%. So people kind of like panicked. They stepped back. Maybe I shouldn't buy a house. Maybe I should wait, right? So they were in the 7s and now they've come down. So now they're like in the low 6s, sometimes even in the 5s, which is definitely on the lower end historically, much better than it was in the 7s. And again, that is because inflation came down. So as long as you see the inflation reports every time saying they're coming down, which they have been now for 3 months in a row, you're fine. Even if you hear Federal Reserve raise their rate, not going to affect. It's the inflation is the thing that we're watching. So rates are good right now. It is definitely a good time to buy homes. A lot of economists predict mortgage rates will continue to get better. Possibly some of them are predicting as soon as 6 months, some of them up to 2 years. But in the next couple of years, rates will come down. Now, here's one question related, though. Should you wait until the rates get lower to buy your house? This is something we hear a lot. Oh, I heard rates are going to go down. Maybe I should wait. You don't have to wait. And the reason is because when you buy a house, you are not locked into that mortgage forever. You can get a house at today's rate. And if they go down in 6 months, a year, or 2 years, you can refinance to a new loan and get a new lower rate. And with my company, we do the refinance with no closing costs because you are our client when you bought the home. We're not going to charge you again for closing costs when you refinance. So you can always take advantage of that better rate. You don't have to wait for it. And here's one more quick prediction that I have related to that. Once the rates do get even lower and the market sort of stabilizes a little more, the news media stops talking about garbage and they're actually like, oh yeah, maybe it is still a good idea to buy a house, duh. But once they get back on track, what's going to happen is more buyers are going to come back in the market. So the people who are afraid and sitting on the sidelines, they're going to come back. And what that's going to do is there's going to be more competition. You see a house you like, well, 5 other people liked it. They're writing offers too. Now you're competing and you're in a bidding war to push the price up again. So I actually think it's better to buy now while some of those other buyers are on the sideline because there isn't a lot of competition. So you'll be able to negotiate a better purchase price. You'll be able to negotiate for the seller to pay your closing costs because the sellers are motivated and there aren't a lot of buyers competing for their homes right now. So if you can qualify and can afford it, I would buy now at today's rate. And then if rates go down, refinance at that time, rather than waiting and competing to buy a home when all the buyers flood the market again.
Now, does refinancing take a lot of time, affect your credit score, cost money? I mean, are there big factors in that? Because I definitely see here how you might want to purchase the house now. And if you're waiting, let's say for 2 years, the value of the house has gone up. And so that percentage is kind of insignificant, especially if you can refinance. Or, like you were saying, otherwise you're going to buy a more expensive house, a lower rate, but the house itself is going to be more expensive. So there are those moving parts of, the little levers back and forth.
Yeah. Refinancing overall is pretty easy and quick. It's not as complicated as a purchase because we're not dealing with the seller. There's not an introduction. So half of the steps are gone and you're not time sensitive. We have to close on this date. So yeah, it's overall typically slightly easier process. Like I said, in my company, we waive the closing costs on those because you're already our client. So yeah, it's not that big of a deal. It wouldn't be a determining factor like, oh, it's going to be a headache. I'll wait.
Yeah. I mean, because we always have so much going on. So it's like, yeah, where is the headache? But God, if you actually don't have to move homes, that's the headache.
Right. Exactly. Yeah. One other thing, based on this question of what is the media talking about and scaring people. So some of the media is talking about, oh, home prices might actually go down and it's a bad time to buy because values may go down. And a lot of that partly is, again, the news media is not experts in real estate or economics, but also they're looking at national trends, right? So you have places like California that have their own complete real estate market that's absolutely crazy. And yes, values are going down. Chicago is not that. Chicago is a much more stable market. So when you look exclusively at economic data for the Chicagoland area at large, not just Chicago, but suburbs and even like Northwest Indiana, our whole Midwest area, it's very stable. None of the economists think values are going to go down in our area. Now, they are not going to go up as quickly as they did the past 2 years, but they will at least be stable, continue to go up a little, just not as quickly. And then over time, of course, they go up more. But nobody thinks that Chicago's market, the values will go down at all. Like that's not even a thing. But the national news sources are all like, the sky is falling, like just fear mongering, like, it drives me nuts.
Yeah. And that's a great reason, again, why just to have a conversation, talk about where you're thinking of moving to, that area, get their thoughts since you're in it every day, really get some other perspectives out there of someone who's actually out in the field.
For sure.
We covered a ton of great information. Is there anything that we haven't touched on that that we're missing or you want to make sure is shared today?
One other thing I would say that's really important, just because I don't see it a lot. Again, if you're working with a different loan officer, that's not me. This is just something you should look out for because it's just really problematic. And I keep seeing it over and over again. So the typical pre-approval process will just tell you a dollar amount. You're pre-approved for a $300,000 house. And that's all they give you. But there are variables in that equation that are important to take into consideration. So for instance, if you're shopping in the suburbs, there are suburbs where the property taxes could be $3,000 a month and other suburbs where they could be $12,000 a month. And that really makes like a huge difference in what your purchase price should be, right? So what I do, and I've seen a few other loan officers do it, but it's not very common, unfortunately, is I'll give you a chart and it'll say, if the property taxes are $3,000, here's your purchase price. If they're $5,000, if they're $7,000, so you could see, and it's a huge difference. And the other area this comes into play is with condos. If you're buying a condo, those monthly assessments can be all over the place. There are some as low as $100 a month, and some of the high rises downtown with all the bells and whistles, amenities, the pool, the workout room, the bell guy, whatever you call them, they could be $1,000 or more a month. So again, I give people a chart to take those variables into consideration. So I would look out for that because that really, like, if you're just like, I should buy a $300,000 property and you come back with $12,000 taxes and $1,000 monthly assessments, like that pre-approval letter that loan officer gave you is garbage. It doesn't really mean anything. Yeah. So that's important to talk about if you are thinking of buying in the suburbs or in a condo, so we can factor in those numbers. And then also just if you're selecting which loan officer to work with, again, if you're not working with me, to interview them, ask questions to figure out, make sure they're experienced, they're knowledgeable, they're thorough, because you hear a lot of these horror stories like, well, I was pre-approved, and then I went under contract and the underwriter said I didn't qualify. Well, in my opinion, that's because the loan officer sucked. Like there's no reason they didn't ask the questions, look at your documents, figure out everything that needed to be figured out to do as good a job as the underwriter. Or if they weren't sure about something, ask the underwriter. I can call my underwriter right now on speed dial, like, hey, I got this case, they got this child support thing, something's weird about it. Can I approve that or not? There's no reason that a pre-approval shouldn't be as good as a full underwriting approval. And unfortunately, again, that is not where the bar is in my industry. The bar is very low. So just be careful that you are working with someone that's knowledgeable, that's thorough, that's looking out for your best interests. Sometimes, for instance, there are different some loan programs are more profitable to the company or the loan officer. You get more of a commission. So for instance, a lot of loan officers will not offer you down payment assistance because it's not profitable to the company. It's not, their commission is lower on it. And they're looking out for their interest, not your interest, So a loan officer that's looking out for your best interest, hey, here's down payment assistance. Let's negotiate a seller credit. Let's educate you on this. Let's boost your credit. Those are the things that are really important to make sure you're getting. And unfortunately, like I said, you're not going to get it just walking in. You may have a great checking account at some bank, but that doesn't mean their mortgage department is great. So that's the biggest thing I always say when you're buying a home. You don't need to know everything. You don't need to research all the loan programs and the rates and this and that. What you need to do is hire a good team that you trust. So between your loan officer, your real estate agent, your real estate attorney, your home inspector, if you have a good team of experienced and knowledgeable professionals that are looking out for your best interest. They are going to ask those questions for you. So you don't need to know everything about home buying. You need to interview people. Don't just hire, oh, I know a realtor because, you know, her mom goes to my church. Well, you know her, but is she good? Like Maggie said, this is your biggest investment for most people. So just because you know her, oh, she might have gotten her license yesterday and she's part-time and she's got a full-time job at McDonald's. Okay, we want someone who actually knows what they're doing to make sure they're giving you the right guidance. And then you don't have to worry about it. That's the only thing you need to worry about is hiring the right team. And like I said, interview a few people before you decide. There's no harm in that. Let them know I'm going to talk to a few people and I need to do what's best for me. Oh, but we went to college together. We're friends. You should work with me. Don't feel pressured. This is your home. It's your investment. And anything with, like Maggie said, estate planning, anything, you want to make sure you're working with those knowledgeable and experienced professionals, which if you're working with some in Maggie's group in Purse Strings, they're vetted. Maggie and I just forgot. Barb, they've interviewed everyone, looked at their licensing, their experience, and vetted them to make sure they're good. So that's actually one way to cut that process and not have to just, you know, oh, I went to church with someone or college. But that is really your most important step. If you don't remember anything else I said about interest rates or debt or loan programs, you don't need to know all that. Just hire good professionals who are looking out for you.
Couldn't have said it better myself. It's all about getting those right professionals, and it's not rude to ask them these questions or to question, you know, their qualifications or things like that. Because it's a huge purchase and they should feel, if they feel defensive around it, then that's probably not the right fit for you.
Yeah. And online reviews. You can Google someone nowadays. You know, I haven't checked mine recently, but I think I have at least 30 online reviews. So it's not just me saying I'm great, but it's like, oh, the clients are like, oh, she answered all my questions. Oh, okay. So it's in line with what I'm saying and what my clients are saying, you know, and my typical rule of thumb is if there's 3 or less reviews, it's just friends and family doing them a favor to write those reviews.
That's true. That's probably right. Well, I appreciate all your expertise that you've shared today. I feel like it's been so much great information. And so if anyone, you know, is just even thinking about buying a home sometime this year or even next year, you know, reach out to Marla. Clearly, she's happy to help you and just get you started and educated on the right process. Her email's been going through the bottom here, marla.barch@myccmortgage.com. She's also one of our Purse Strings approved professionals, so you can check her out on our site, pursestrings.co. Is there anywhere else you'd like people to reach out to you?
Yeah. What I was going to say is if you think you're not ready for the home buyer consultation, like I said, you could do it even if you're not ready to buy a home. But if you just want to start getting education, you're thinking, I might not do this for a few years, but I just want to get my feet wet and start learning about it. Follow me on social media. I do put up educational videos often about all sorts of different topics, whether it's credit building, loan programs, down payment assistance, whatever you want to learn about. So if you're just following me, you'll get those little trickles of education throughout time until the point that you're ready to move forward. So I am on Facebook. I'm on both Facebook. I have a business page and a personal. I put mortgage information on both, so you can go to both either way. But I also have recently set up accounts on Instagram and TikTok. And it's the same video I post on all of them. So whichever platform you use, but it's just a good way to continue to educate yourself over time until you're ready to move forward.
And are you on there as Marla Barch or CrossCountry Mortgage?
My Facebook's are Marla Barch. My Instagram and TikTok is Marla's Mortgage Team.
Marla's Mortgage Team. All right. Awesome. Well, I thank you for coming on today and providing your expertise. I hope everyone has a great home buying process this year, if that's one of their goals. And we'll be back here again next week with another Lunch and Learn. So thank you again, Marla, and we'll talk to everyone soon.
Fantastic. Thanks, Maggie. Bye, everyone.
Bye.